Hello, this is Thomas Key, President and CEO of Stock Traders Daily. There's been some turmoil in the market recently, and I want to address that in this video. The effort is to make things easier for you to understand, and although I have written about this, sometimes it's easier if you actually hear this in words. So that's my intention with this video. My intention is also to address our approach leading into the summer months and potentially and probably throughout the entire summer. Now, I wrote some articles recently about the technology sector and what's happened as far as the potential leadership changes, because after all, the NASDAQ 100 has been leading this market consistently all year so far. But that may likely change given the turmoil and the shakeup that happened in those FANG stocks, Facebook, Apple, Amazon, Netflix, and Google, over the past few days. So, if that's true, what do we do from here? Now, I don't want to overstate what happened. This was a very, very focused selling effort by institutional investors who took profits in these large cap tech stocks that were running aggressively higher, sometimes without reason, it seemed. In any case, it was focused selling. It wasn't broad-based selling. So, there's a grain of salt that needs to be taken with that effort and what we saw, but that doesn't change an inherent fact that also presented itself. This market is not strong enough to withstand selling pressure like that sometimes. It will fall if the market selling pressure increases, and it can. That's the most important part. The market almost seemed as if it would never fall again before last Friday. But now the perceptions are different. The perceptions are that the market can absolutely fall, that maybe valuation does suddenly matter again. These type of ideas are coming into people's heads right as the summer months begin. And that can create high levels of volatility, especially given the relatively low normal environments, low volume, normal environments that exist during summer. For those that understand what I mean, summer is typically riddled with smaller investors and lower volume trading environments. And with that, small bits of news that might not otherwise seem to have influence on the market can actually influence the market more substantially than they otherwise would, creating higher degrees of volatility. And that's one of the reasons that some of our trading strategies work so well during the summer months. The day trading and swing trading and lock and walk strategies, for example, those strategies have exceptional performance normally during summer months because volatility is good and people respect the trading channels of the market. That's fabulous for us. So I look forward to that from our trading perspective. But what I'm really trying to talk about here is reducing the exposure actually in your core portfolio strategies. Now, everyone has them. We all do, regardless of what you're calling it. We have long-term investments in mutual funds, in our IRA accounts, in our 401k plans, whatever it might be. We all have some form of longer-term investment into the stock market. Those longer-term investments are often considered just buy and hold and don't worry about it type of investments. But I think that's the biggest risk people are facing. This whole buy and hold mentality, don't worry, the market's never going to fall again. Look, that is probably the worst way of looking at this market, because this market is going to fall again. And what we saw over the last few days tells us that it can. Now, the things that I've written for you in our special reports about the ECB and the stimulus monies that are coming in ultimately suggest that we are not going to see a market crash while this $60 billion per month is being printed. But that's not going to last forever. And when it stops, these concerns about valuation that exist right now, with an S&P 500 at 25 times earnings, whose typical PE multiple is 14.5, suggests that we could see a 40 to 50% market decline when the liquidity spigot drives up. This is important to recognize because it is probably something that we are going to start to realize as a matter of fact as this year continues. In other words, the ECB is already on a path to reduce their stimulus efforts. And if they continue on that path, stimulus will eventually end. And given their timescales, it's likely to be known when that's going to happen as this year continues. So keep your eye out, because when it happens, the market is going to start to reprice itself. That leads us to two issues. Number one is we have a summer in which volatility is typically higher, good for trading, maybe bad for buy and hold investments, and we have longer term prospects that are quite dire, market crash type of things. So what do you do in that environment in your core portfolio strategy? My recommendation is adopt some of the principles that we use for our core portfolio strategy. Look, this is not a strategy that has these fabulous types of returns, hundreds and hundreds of percent. It is a boring strategy that's actually perfect for larger portions of portfolios because it does not have high degrees of volatility. In fact, we are usually hedged or neutralized against market conditions about 75% of the time. But still, our returns have been fabulous. Granted, I haven't been offering this core portfolio strategy through Stock Traders Daily for very long, but I have been using it in the managed account side. And I know it works, and it's proven itself. We've gotten these returns while being hedged almost always against market decline. That's a big deal, especially in summer months where volatility is likely to increase. But this approach that we use can be overlaid onto any existing longer-term portfolio. Say you own a group of mutual funds and you want to neutralize them from time to time, just like we do in the core portfolio strategy. Well, you can do that, and I can teach you how. If you have a 401k that you want to neutralize from time to time, it's easy to do. If you have a portfolio of stocks that you've held for a long time, and if you sell those things, large capital gains are going to hit you. Hey, look, you can neutralize those as well using the methodology ingrained in this core portfolio strategy. So it's boring. It's not as exciting as our trading strategies. But I can't emphasize its effectiveness enough. Because it is neutralized almost always, and it reduces volatility in your overall portfolio so significantly as a result, this portfolio, this core portfolio approach, is extremely valuable. So although it doesn't have these eye-popping numbers like some of our other strategies, I'm encouraging you to look at it. Now look, with that said, some of our other strategies just have great numbers, right? I'm not going to argue with that. But the core portfolio strategy, when everything's said and done, is achieving these results with virtually no volatility. And that's what it does. That's what it's designed to do. And when you're entering a period of time, summer months here, where volatility is likely to be high, this no volatility approach or low volatility approach is extremely attractive. And when we're looking at the eventual and soon-to-be end of the stimulus efforts that have caused this asset bubble in the first place, again, protecting assets becomes very, very important. And I think the recent turmoil in tech explains, at least to a certain degree, or proves to a certain degree, that it's possible. Where a month ago, investors weren't thinking about this at all. Risk? No one cared a month ago. Well, suddenly they do. And they should. Because the market's way overvalued and we're in a huge asset bubble, not only in stocks, also in real estate and also in bonds. And all of that is a direct result of stimulus. So when stimulus ends, all of that is going to get hit. We can protect ourselves, though, at least in our longer-term investments, by using this core strategy approach. That's why I designed it. That's why I'm offering it. That's why it's there. Don't discount it. It works. In the process, though, make sure you read these special reports, right? This ECB update, it's going to matter because our eyes are on the ECB here. So we need to continue to monitor stimulus. If stimulus is causing the asset bubble, and we can identify when stimulus is going to end, we can identify when the bubble is going to pop. I talk about that in that ECB update, and I'm going to continue to talk about that. So, in summary, what I'm suggesting here for your core portfolio strategies is start to adopt what that core portfolio strategy we offer at Stock Traders Daily does, because it's effective. You can make money trading on the side. That's what typically people do, right? Core portfolio strategies are doing one thing where their trading account's doing another. What I'm talking to you about is your core portfolio positions. Protect those things. It's time to do it. Your trading account, hey look, if summer works for us like it has in the past, we should probably have a good year. A good summer. Let's look forward to it. But let's look forward to it while adopting this neutralization approach in the core portfolio too. Because if there is market volatility and you start to see opportunity as a result in the trading accounts, but your core portfolio, which houses all of your money or most of your money, starts to decline, you're likely to start to make very bad mistakes as well. So protect your assets for two reasons. First, because you should, but second, because you're likely to do better on your trading account if you protect your assets when market turmoil is likely to exist. Thanks for your time. I hope this offers some good clarification to those reports I recently issued. Have a great day.